The next step is, of course, looking at the net jacks. So I want to see where the big areas are. So obviously the market is targeting this 6,500 level. You see here from the big, wide core resistance level here. And clearly our support level is 6,300, right? So if we look at SPX now, we can come on the chart. We can get our levels right there. All right, so we have our put support is all the way down here and our core resistance is up here. So the market is really targeting these 6,500 on SPX and the resistance that we have coming from the option market. So the highest level is the 6,300, but also we have a very, very strong area right here. So just because the put support is higher at 6,300, this can also be an interesting resistance at around 6,440, which is also 445, which is also the IVO level that you see here. So this clearly is an important area that we see right here. So mapping this in the chart, very, very key, because as you can see, the market has been chopping around this level for the whole morning, and then now we're trying to maybe move higher right there.
Right, but back to that GEX chart, like, how do you read into that when you see, I mean, you said it's very, very strong level. That red bar looks tiny in comparison to all the green bars. So how do you?
Yeah, sure. So it's tiny compared to the green bar because we are in a positive gamma environment, but it's still relatively big compared to the red bar. So if you see here, we have our put support at around, I think it's about probably 20 million in jack. So it's still quite important. And then obviously this becomes kind of like important reaction areas. And we're going to see an example, maybe looking at NQ in a second. But paying attention to these bars. So not just looking at the levels, but also coming and see how big the levels are. And also come and check, for example, our liquidities level. So you can see that not only looking at full expiration. So we have two charts that look at gamma. We have the all expiration, which is really looking at the full option chain, but then you also have to look at the 0DT stuff. So here, obviously, if you look at the full option chain, you might think this level is not as strong, but then you come into the 0DTs, which is today's expiration. You can see that basically this level is very big for today. And again, very important, 0DTs options have the highest sensitivity, have the highest gamma. So any price action around these levels could actually have a very, very strong effect. So again, you have this area here. We tried to break down. We broke down at the beginning. We tried to break again. Now we are in the same area right here. So very, very strong position in there at this level for today.
So then why? So on that chart, so you see my ES chart. Why don't I see those same levels that you just had on the trading view? Are those based on the QQ? Because I thought I had. Let's see here.
Well, you are probably looking at the S, and I'm looking at SPX currently.
Oh, that was SPX on TradingView. Okay.
Yeah.
Okay.
If we look at the S, we can do that, and we can do the conversion. But I'll show you what I do on NQ, for example. So obviously, for futures, we have end of day on futures. So if you look at, for example, ES, the levels that you see on Bookmap will be the end of day levels. And then you can also convert the intraday levels. So I also can show you how I would also go and look at the intraday stuff and see how things have changed. But I normally start from SPX, and then I also look at SPY. The reason why I look at SPY is because it can give me a completely different picture of what the market is doing. So I always do this analogy. This is very important. You think they're trading in the same way, but they're not. So SPY, the customer base of SPX, ES, and SPY are completely different. The option chain of the three assets are completely different, and understanding how they play out and how they interact with each other is very, very important. So if we look at the picture now, we see that now on SPY, we are in a negative gamma condition. We have a very low option score, still very low volatility, but there is a lot of more negative gamma coming into SPY. The reason is it doesn't mean that we are in a bearish market. So the divergence that you see is that we are in a bearish market, but it could mean that a lot of investors are starting to look at hedging positions, and they do that by doing that on SPY. SPY is typically used by large asset managers, retail investors that are putting SPY on their 401k plan. They're looking at longer term horizons. So it is normal that in a period of uncertainty, there's a lot of macro events. Investors are more looking at hedging the profit that they made on an asset like SPY rather than looking at SPX, which is more like for shorter term traders, and it serves a different purpose, let's say. So having SPY also can help me say, okay, hold on a second, maybe I want to pay attention to what's going on in the two assets.
Interesting.
And I can do the same so if you trade NQ, you also want to do the same for QQQ. So if you look at NQ, we are probably in a positive gamma environment. When we look at QQQ, we are in a negative gamma environment. We have very bearish option score right here. And as you can see also from the matrix, if you look at the positioning across the full option chain, we are starting to see it's like a lot of negative positioning piling up here. So that's why looking at this divergence is very important, because again, QQQ is traded mostly by retail traders that are putting QQQ in their 401k, large asset managers that are looking to take exposure to the technology sector. It's also traded by shorter term trades, but that's not the big of the volume. So the most of the volume that you see, or the AUM that you see on QQQ, would be longer term investors.
Right, but wouldn't that be just them potentially taking profits, like you said? Same thing for the SPY, right? So I mean, do you put any weight into that as far as a thesis that we may be going lower, or is that just you brush that off?
So it could be like, the way I would read this is not necessarily we are eating a bearish market, but what I see is that there's increase in fear of a potential downturn. So think about, you always have to put yourself in the shoes of a long-term investor, right? If you are like a big asset manager and you've made a 10%, 12% return, and you start seeing macro catalyst events that could actually kill your profits. So let's say that something is happening with the tariff situations, with the Federal Reserve situation, whatever is happening in the world, you don't want to risk your profit. You don't want to lose what you've made. So you are basically hedging yourself. And the hedging comes from the option market, and basically looking at how the gamma profile for the different expiration across an asset that is correlated to the asset that you trade can be very important. And if we look at an example from today, for example, if we open NQ, so we just take the futures level. This is going to be our futures level right here. Obviously, nothing is really happening today. The market is calm. We have our IVO level here. We have our core resistance there, but then we can overlay that with our QQQ level, and we see the strong put support 0DTs level here that acted as really a support. And then we can come back to the dashboard and we can see basically how big this support level is coming at the bars here. So when I formulate my thesis and I go back into my chart, I can say, okay, we have a very strong bearish candle here. We broke through the IVO level, so we are breaking through the kind of gamma condition level for QQQ. And then we have our next level, which is here. So this move down, very, very strong move. But let's go and look at how the chart looks like. So let's look at how big the bar is, how much gamma is expiring today. So you can see from the matrix that we have about 6.6% of negative gamma expiring today. So it's a lot of gamma compared to the overall chain. And again, we know that there's a lot of sensitivity there. So that put support level could have been an interesting areas for a reversal. You also then have a strong high vol level here for coming from the future side. So if you want to just look at the futures level, we have our high vol level and our JAX1. So you can kind of use those areas, that those could potentially be stop loss area. Like it's going to be, obviously, there's going to be a lot of friction in going through the area here. So if you are thinking that the price could go down, you still have a very important area right there that can potentially defend yourself from a downside. And then, of course, you can overlay the intraday levels there and see how the different assets are behaving. So here we have our QQQ levels on the right and our ES level, Q and Q levels on the left.
Yeah, but how does the, you said there's a decent amount expiring today. How does that tell you whether it's more likely to hold or bust through those areas? That's what I don't understand.
Sure. So you need to understand that it's the same concept as support and resistance, right? Is a technical support and resistance level going to hold or is not going to hold? So here, what I see here, that there's a very, very big amount of negative gamma expiring today, and there's a lot of negative gamma expiring at this level here, right? So if I, for example, would position myself for today, I know that if the market is going down, there's going to be some major support around this area here, right? Which is looking at my put support from QQQ and as well as high vol level from NQ. We broke through this area, so I know that the volatility, once we break through the high vol level here, is going to be higher. But then we also have some strong levels protecting the downside. So if we see a strong candle breaking through this level, then that could mean that the market could potentially go lower, and this could be fueled also by the strong bar that we see here. So here, if we break through these 570 levels, then I know that dealers will have to hedge more aggressively because, again, these are options that are expiring today. And there's a lot of gamma expiring today, which is 6.63% of negative gamma. So if we are breaking through this area, then maybe we are going to see some strong downside move. We didn't break through this area, and then actually we moved back to the other side very fast. So if you look at those candles, there are two very, very big candles here.
Right. I mean, the way I'm looking at it, so that, again, when the stuff like your stuff matches up and like those types of theses match up with what I'm seeing. So we've been talking about this all day in my room or this morning. Right. Yesterday we had a failed balance breakdown. So usually when markets try to break down out of balance and they get back through the high volume node, which is just the area in a balance where the most trade occurred, you expect that. You shouldn't see that. So it's trying to recover again. But I'm still leaning for that, and then knowing those areas that you talked about, because I told my room today, if this comes back, I'm already thinking this is still going to happen, right? You can't really put much weight into it right now, but if that comes back, that's going to be breaking your areas, and then, like you said, with that kind of expiration expiring today, that we could lead to a bigger move. What's the over under in sports terms, like for a big percentage of expiration versus something you don't even pay attention to? Like you said, 6 is a lot. What's not a lot? Like, or what's normal? 2, 3?
I think, yeah. I mean, if you go, let's go back here. So it really depends. So, like, again, we're looking at the full option chain. So we're looking at a lot of different expirations. So sometimes if you look at, for example, OPEX, if we see, where are we? So now this one is actually not OPEX, but normally if we take, for example, SPX, normally during OPEX, we have about 15-20% of option expiring. So if you see here, for example, this is the September OPEX, you have a 20% option expiring. That's quite strong. But when you see also like a 6-7%, it's quite relevant. It's quite important. So you see now, on average, we have 1%, 0.5%. So whenever you see a 6-7% expiration, it's kind of quite a strong
What's
point.
what's the most you've seen?
I've seen, if you look at VIX, sometimes I've seen 45%.
Wow.
Yeah, so like when we have VIX expiration, we see a lot of option expiring on that day. So if you come
Yeah,
here,
I noticed that last Wednesday. I think it was last Wednesday. I got smoked at the beginning, and I forgot that it was VIX expiration, and I'm like, what is going on here? Is this a news story? I still think there's something news involved too, but I
yeah,
mean, last Wednesday that on that sell off, I'm just like, what is going on? And it was VIX expiration. So I got to really pay attention to. Like I said, the more this stuff is more and more prevalent every day, you've got to know that these options and these areas and expirations, and it's really really important.
yeah. So for example, here September we have 42% of negative gamma on VIX expiring. If you're trading on September 17, you need to pay attention to this information, because again, if you don't look at that, then you might get smoked, like you say, something really strong happens and you don't understand where it comes from. Most likely it's going to come from flow or the option activity.
Right.
Yeah, the other thing that I look for is also, so let's say that let's imagine that, let's take out this for a second. We took this trade here on this area. Clearly, I'm looking for targets. So again, I know that this area is going to be a challenging area between these 2 points, because it's the kind of like the regime change from negative to positive gamma. So I know that there's going to be a lot of like resistance here. So we see that there's a lot of like activity around this area. Then of course you have your core resistance, your DTs here, and then above that you have some jacks level, but then you also get your 1-day max up here, right? So whenever I'm looking at targets, we can look at, take out the levels, then you can kind of draw your what we call roadmap. The indicator can also do it for you. So if you come to the indicator, we also have a roadmap feature here that it can also draw the areas automatically based on the ratio that you set up. So if I want to make the boxes a bit smaller, I can do that. And basically what the indicator is going to do is going to do exactly what I did. So if I remove my drawing, the indicator is going to draw my areas right there. So I can use this as targets, for example. So this can become my boxes. I can then, of course, remove the levels and basically use them for target areas. But then once I have that, I want to come to the dashboard. I want to see, looking at the intraday stuff, I want to come here and confirm what's going on in my assets. So if I open up QQQ, for example, so here what we have is we have our intraday net gamma exposure chart. We have our 0DT net gamma exposure chart. So this can be important, especially for those who are trading day traders. If you're trading QQQ options or NQ futures, this can be very, very important. The other cool feature that we have is you can use the arrow back and forth to replay the situation since the beginning of the day. So we can see, for example, at 9:35 at the open, our net gamma exposure chart was kind of like, you see a lot of negative positioning here, more negative positioning, and suddenly you start seeing kind of like an increase of potentially positive positioning. But what's going to be actually more important is looking at the difference between the current situation, so the current snapshot. So we take the data every 30 minutes, and then we calculate basically the difference between the previous day. So here, when you look at 9:35, you are looking at the net gamma exposure at the open versus the previous day. So you want to see if we're seeing a lot of positive positioning piling up or negative position. Like in this case, we see at around 10, which is right here. which is this kind of candle right there. We saw some negative position piling up, and then suddenly we start seeing a lot of positive position there. So again, we can use that versus the previous day, or we can use the same versus the previous snap. So why do I use this? Because I want to see if I'm on the right side, and I want to see if the option flow is confirming what I'm seeing. And if not, maybe I want to take it the opposite direction, or maybe like I want to manage my trade accordingly. So we start seeing, okay, a lot of negative gamma coming from 10 a.m. compared to 9:35. This is kind of like the strong move that we saw here. Then we look at 10:30 again, and we start seeing a lot of positive gamma happening. And then
So all that negative gamma disappeared?
this is like the change from the previous snapshot. So that means like, this is like just how much positive gamma or negative gamma has increased compared to the previous 30 minutes.
Okay.
So it doesn't mean that the gamma has disappeared. It means that we are having more positive gamma or more negative gamma.
Right, but wouldn't that be like you showed on that down move? There was a lot of negative gamma coming in, and now on this, it kind of moved up. Now a lot of positive gamma. I mean, isn't it just reacting? Is it reacting to the market, or could it give you a signal of what's to come? You know what I mean? Because on that move down, it was all red, and then now on this move up, it's all green. I mean, is that them reacting to the market, or is it forecasting something?
I mean, I think it's a bit of both. We take the data every 30 minutes. So what we're showing you here, clearly, obviously, is not real time yet. It will get to real time. But basically, like, let's say that we took the trade at the level here, right? So let's see that we had this nice put support area here. What I don't want to see is a lot of like negative gamma piling up over multiple snapshots, because that means that my trade might not be confirmed. So if I see that the gamma change is confirming my theory, then that can help me basically either stay in the trade longer, set my stops, and also set my profit areas. So let's imagine that the price comes here, and this sorry, let's say that the price moves up towards this level, and I start seeing a different picture on my JAX difference, then maybe I know that this is a strong level, gamma is changing. Why would I lose profit? So I might want to take my profit right there.
Interesting.
So I don't want the market to react. So if I'm already did a great trade, if I were able to take this move, I don't want to lose because I don't pay attention to what the option market is telling me.
Right.
So I want to look at confirmation. Hey, are we seeing a massive increase in positive gamma at certain levels? And that can dictate how I then can position myself here.
So what do you see in something like Crude right now? Because I want to see if that matches my thesis that it's going to get crushed. It's kind of holding, but it's in scary territory here.
So for Crude, we can go in our. So also, like, you can look at the active future section, and then we can look at which contract have the highest option activity. So if we look at commodities, for example, we look at Crude, and we see that so most of the volume is on the CLV contract. Most of the open interest is actually on the CSZ, so we can open both. There's a similar open interest. I'm just going to use this one for now. So we can open our CLV chart here, and then we can open our levels right there. Right. So from the option standpoint on this contract, and then we can also look at how we can view the ETF. You can see that we are kind of like in a bullish environment, both from the option side and momentum side, and also volatility is very low, and we have a strong seasonality. So right now, clearly the market is dropping and is like at this high vol level here. But yeah, I can, overall, like the option position on crude seems to be looking at these areas of 65.25, strong support at 63. So that's kind of like the level that we can monitor right now because we are close to that level.
And then do you have the changes like you do on the equities over hour by hour?
Not on the future, but we can look at it on the ETF side. So for crude, we can look at USO. So we can look at the ETF, right? Yeah, and you can see the kind of same snapshot here. Yeah, so today we've seen a lot of like negative gamma since the open. And then if you look at the previous snapshot, yeah. And then what you can also do is you can potentially convert the intraday levels from USO, for example, here to CLV. But again, for crude, the problem with those ETFs is that they are very affected by the futures curve. So you always have to pay attention also whether we are in contango backwardation, because those ETF will lose or add value based on the curve. So it's always tricky when you trade crude oil. There's not really a product that really matches like NQ and QQQ.
Right.
So it's kind of like more tricky on crude oil.